Coming up on Business Incorporated. South Africa's power utility company Eskom announces moves to stage 4 load shedding. A Nigerian company is set to pay dollar debts and naira for extorted fights. Plus, Zimbabwean government reassures foreign investors the repatriation of profits is seamless. Hello and welcome to the program. I'm Ladi Williams. Let's start off with market numbers. We see trading on the African continent kicked off the midweek on a positive note at intraday. Nigeria's main index rose 0.1%, while South Africa's benchmark index climbed 1.22%. Elsewhere, Egypt's index also traded higher by 0.79%, while the Nairobi Stock Exchange closed Tuesday's trading session negative, down 1.19%. And over to the Middle East, where sentiment was mostly negative. The Abu Dhabi index fell 0.79%, while the Dubai index fell by 0.5%. Still within the region, Saudi Arabia's index dipped 0.62%, and the Qatari index also declined by 0.39%. It's all red in that space. Let's move on to Europe now. See, the EU has set out its plan to end its reliance on Russian gas. And we also have the U.S. ban on imports of Russian fossil fuel. Let's hear more now from Rob Watts right there in Berlin. Great to have you, Rob. So the EU has set out plans to end its dependence on Russian energy. What's it aiming to do?
So this dawning realization that it is over-dependent on Russian oil and gas, having long been told that by the Americans. And this is the European Commission moving to end that reliance, as well as a quarter of its oil. It gets 40% of its gas from Russia. So the EU is very reliant, but it says that any supplier that explicitly threatens it can't be relied upon. So it has now set out this plan to end its reliance on Russian energy by 2030. The plan looks a lot like a doubling down on a lot of the processes that were supposed to be part of decarbonising the European Union. It talks about expanding renewables, for example. It talks about encouraging Europeans to simply use less energy, in particular less gas. It also recommends that they turn down their thermostats by 1 degree. Then it also says that EU governments need to be looking for alternative sources for their gas, including more shipments of liquefied natural gas. Commission President Ursula von der Leyen says the proposals have the potential to reduce the EU's demand for Russian gas by 2/3 by the end of this year.
All right, talking about other options here, where's the EU going to get its energy if not from Russia?
Well, that is, of course, a key question, and the Commission has been scouting around. I mentioned liquefied natural gas. A key provider of that would almost certainly be the United States. The European Union's already been increasing its imports of huge tankers full of LNG from the US in recent years. That actually hit a record high in 2021, and the EU now accounts for a quarter of America's LNG exports. Expect that to increase, though. Another likely key source of liquefied natural gas will be Qatar. And in fact, the US and Qatar have been discussing how they can work together to supply additional LNG to Europe. The EU is also saying that it's going to look to Azerbaijan, Norway and Algeria as alternative sources for LNG. There's already work actually underway to develop energy ties with African gas producers as well. Algeria, I already mentioned, Egypt, Nigeria, Angola. Then the European Commissioner is also in talks with existing major buyers of LNG, particularly in Asia. It's talking to Japan, South Korea, China, India about sourcing some of their excess supply as they try to wean themselves off Russian gas here in Europe.
I guess other countries need to ramp up production at this time. Well, the U.S. decision to ban imports of Russian, fossil fuels is having, a big effect on markets. What can you tell us right there?
Well, we've seen the price of oil once again shoot up. Brent crude rose almost 2% to over $130 per barrel. Analysts are actually saying it seems more likely that the price will rocket past the $150 mark than fall back below the $100 mark, where we were only a few months ago. Particularly seeing as the sanctions announced by the US, the UK as well, and EU have been put in place without an announcement that replacement supplies have already been secured for this oil and gas. However, European stock markets are on course for a steadier day on Wednesday than they've had certainly during the first 2 days of the week. In Frankfurt, futures rose around 2% and they were up over 1.3% in London in early deals. Why a firmer start for Europe, you may ask? Well, analysts are saying it's less a reaction to an improving situation for European businesses, but more the fact that there's been no big piece of news to give investors further reason to sell. Basically, they've already factored in the situation to some extent. But as we've seen a lot over the coming 2 weeks in relation to Russia and Ukraine, things can change very quickly.
Right. All right, that's Rob Watts right there in Berlin. Thank you so much, Rob. Now, moving on to the UK, more sanctions pouring in against Russia. Let's see what's happening in the UK with Juliana. Great to have you, Juliana. So the UK government has unveiled new aviation sanctions against Russia this morning. How's it looking?
Yeah, good afternoon, Laddie. Well, following Volodymyr Zelensky's historic address to British parliamentarians yesterday afternoon, Boris Johnson has doubled down on his pledge to tighten the noose around Vladimir Putin. And we got this update from the Transport Secretary, Grant Shapps, overnight, saying that from now on, it will be a criminal offence for any Russian aircraft to fly over UK airspace. Britain has become one of the first countries in the world to do so. There did appear to be a grey area as it pertains to Russian jets. We know that wealthy Russian owners, Russians do like to fly lots of private jets, but they are typically registered in a third country. So there was some concern about that. However, just a couple of hours ago, there was some breaking news that a jet based in Farnborough, which is an area known for people who like to fly in their private jets to this country, it has been seized by the British government. Now, at the moment, we're not certain if this jet is indeed owned by a wealthy Russian. However, the reports suggest it does. It is, however, registered in Switzerland. So we are going to be seeing more of this. At the moment, Prime Minister's questions is ongoing in the House of Commons. We are still getting a few MPs who are not really happy with just how far the British government have gone. They do believe that much more wealthy oligarchs living in the UK, but with really close ties to the Kremlin, should be sanctioned. But I believe this no-fly zone over UK airspace is at least showing some sort of muscle.
Yeah, quite interesting. And I see Russia is planning retaliatory sanctions, and they say it'll be swift and felt in the West's most sensitive areas. That's quite a threat there.
It is quite a threat, especially after, the reports overnight of Putin, the US president deciding to ban any imports of Russian gas, which is a huge story. Unless I've missed it, I'm yet to hear what Russia's retaliation is going to be. But 24 hours ago, Putin was saying that there will be swift retaliation efforts. And I think that the main retaliation would be stopping the LNG flowing from Russia into Europe through Nord Stream 1, the Nord Stream 1 pipeline. This is going to have dramatic effects on the entire world, not just Europe, who of course are the most dependent upon Russian gas and oil. But it does appear as if the West has waged an energy war against Russia. There was a little bit of breaking news actually just before I got into the studio, which suggests that some Russian oil was sent back to the Arctic early this morning, late yesterday, from British dockers. Now, I don't know if if they were acting independently or if they were acting on behalf of the British government or a firm, because we know Shell has said that they're no longer going to be doing business in Russia. But 7 vessels carrying liquefied natural gas and Russian oil was sent back to the Arctic. Now, of course, it could still end up in Britain if it's pumped underneath the channel. It could also go into France and Germany. But clearly, this is escalating. I think, the West are trying to do all they can to try and stop Putin's bombardment of Ukraine. But where is this going to end? We'll have to wait and see.
Right. The energy war continues there. But how are the markets looking at intraday?
Well, the markets are doing pretty well at intraday. We are seeing triple-digit rises on the UK blue chip industry. We've had a flurry of positive corporate updates this morning. I think for anybody who's watching the war closely, and I suppose everybody is, Coca-Cola, they were under extreme pressure yesterday to cease trading in Russia. They made the announcement that they are going to cease trading, which is why their share price is flying high at intraday. It's up by about 7.5%. And other commodity stocks are also doing particularly well. The FTSE All Share is up by 2.36%. The FTSE 100 is up by 1.97%. And the FTSE 250, the domestic market, is going really well, up by 3.36%. In the currencies market, the British pound is currently up on the US dollar by 0.55%, but down on the euro by 0.25%, and up on the Japanese yen at intraday by 0.70%, Laddie.
All right, market's looking good. I'll be watching out for the close today. Thank you so much, Juliana, for the update.
Thank you.
All right, now let's see what's happening in Asia there. We see it's mixed as markets in mainland China and Hong Kong struggle to recover from losses seen early in the week. Shanghai Composite in mainland China closed 1.13% lower at 3,256 points, and the Shenzhen component declined 1.12% to 12,107 points. CSI 300 index, which tracks the largest mainland-listed stocks, shed 0.92% to 4,226 points. All 3 indexes daily have fallen more than 3% each. Hong Kong's Hang Seng index slipped 0.67% to close at 20,627 points. Elsewhere in Japan, the Nikkei 225 dipped 0.3% on the day to 24,717 points, while the Topix index was fractionally lower at 1,758. While the S&P ASX 200 in Australia jumped 1.04% to close at 7,053 points. Over in Southeast Asia, Singapore's Straits Times index gained 1.55% as of local time. MSCI's broadest index of Asia-Pacific shares outside Japan also gained 0.49%. And stock futures were higher earlier in the morning today as investors continue to assess a surge in commodity prices and high inflation while the war in Ukraine continues. Futures tied to the Dow Jones Industrial Average rose 353 points. The S&P 500 futures climbed. The Nasdaq 100 futures also both gained by 1.1%. Let's get a summary of yesterday's close from our U.S. correspondent, Maria Bird.
The U.S. stock market was quite erratic on Tuesday as the Dow Jones fell by 0.6%, the S&P 500 fell by 0.7%, and the Nasdaq fell by 0.3%. The U.S. stock market took a big dip after President Biden announced the ban on Russian oil in the U.S., but it took a little bit of a rally forward after the Ukrainian President Zelensky announced that the war could end soon. Investors are just not quite sure where the U.S. will end up as it relates to its impact from the Russia and Ukraine war.
That was our U.S. correspondent, Mary Baird, there with yesterday's close in the U.S. Well, after the break, we'll take a look at food security on the African continent. That's our next conversation. Do stay with us. This is Business Incorporated. Welcome back now to our next conversation. Well, agriculture is an important engine of growth and poverty reduction, but the sector is underperforming in many countries on the African continent. Well, we've been celebrating women all through the week. Let's get a sense of women participation in agriculture in Africa. We have Jennifer Bond, Acting Managing Director, African Green Revolution Forum, joining us on the program. Great to have you.
Yes, thank you so much for having me on the program.
Yeah,
Greetings
so
from Kigali.
yeah, greetings from Lagos. So that's great to have you. Well, can you paint a picture of women's participation in agriculture on the African continent?
So women's participation is, of course, very critical when it comes to our food security, both in terms of production as well as in terms of nutrition, right, and consumption, because still a significant part of our farmers um, um, are women. According, for example, to the World Economic Forum, they're estimating that 70% of the produce worldwide is being produced by women. And when you look at fruits and vegetables today, that number is actually even higher. But then again, women also play a critical role in the kitchen and the diets and the food that we eat. So if you want to transform and revolutionize how we produce food, if you want to transform how we're having more access to affordable and nutritious food, women are the place to start.
Right, and what do you think can be done to, encourage more women participation with agriculture on the continent?
I think it's not just a matter of participation. Let me just break it down what I think is really required in that sense. Despite the fact that it's playing such a critical role in food production and also consumption and the diets that we have, women do not have equal access to resources, being it inputs, being it finance, also just land security or income security. And I think it's very critical, of course. Many of our farmers across the continent are under-resourced when it comes to women. A gender imbalance also comes into play, and we need to address both generically what support services and mechanisms are we developing for our smallholder farmers, but secondly, also how do we address gender-specific issues that are hampering our women farmers from basically playing the role that they need to play. So that is one, looking at holistically at quite a number of mechanisms. I think secondly also, it has to start with leadership and prioritizing the role and equal access of women, not just in food chains, but in society in general.
All right, let's talk food security now. With geopolitical tensions right now and rising, commodity prices, what should Africa be doing, right now?
What should Africa be doing right now? In all honesty, let's just take a step back, right? I think if we look over the past couple of years, especially with the COVID pandemic, it really brought to light some of the weaknesses and fragility in our food systems, and also think just about the impact of climate change. To me, when it comes to making our food systems more resilient, it's not just about the COVID pandemic that we're just emerging from, or the war in the Ukraine, because every 1-2 years there will be another crisis that will actually bring even more challenges. And we also have just the impact of climate change, floods, droughts, increase in pests that is constantly challenging our food systems. So from that perspective, I think many of the measures, the interventions that have been designed also in the COVID pandemic are still relevant. Do we have sufficient data in terms of our food balance sheet to make informed choices and decisions? Do we have our production numbers, our stocks, etc., at hand for some of our key decision makers in the policy sphere, etc., to make the appropriate decisions? So just having access to the appropriate information and data, I think, is critical. I think secondly as well, we have to look at our production systems. Our farmers are still the ones with the lowest access to fertilizers, inputs, improved seeds, etc. And we have to start looking at sustainable mechanisms and business models to provide them with access to food. But secondly, also just connectivity and linkages to market. And I really would like to emphasize the importance of strengthening Africa's regional trade. You see some of the tendencies, and we've seen it in the 2008 food crisis as well, for governments is to retreat, and protect their own population's food security, close borders, seek all kinds of measures and interventions. I think we do have to realize that we need regional approaches and regional solutions as well. So the first starts with informed decision making, and the second is also just convening and dialogue to assess, to make sure that we know what's happening, but we put the measures in place to strengthen our food systems. Thank you.
All right. Well, we'll keep tracking to see how all of this plays out and how Africa can actually, find a way to secure food on the continent. Thank you so much, Jennifer Bond, Acting Managing Director, Africa Green Revolution Forum. Thank you so much for coming on the program.
Thank you, and see you in September in Kigali at the Green Revolution Forum.
No problem. Okay, now, so moving on now, see South Africa's power utility company Eskom has announced that it will move to stage 4 load shedding from today due to further breakdown in units. In a statement, Eskom noted that a unit each of Kendal, Duva, Camden and Kusile power stations tripped and has apologized to citizens for the implementation of a load shedding and will continuously review the situation and act appropriately as the circumstances change. The power utility company said stage 4 load shedding will continue until the 11th of March. Thereafter, load shedding will move to stage 2 until Monday, 14th of March. And as the world continues the battle, the outcome of the tensions between Russia and Ukraine as it affects global supply of energy, the Secretary General of OPEC, Mohammed Bakindo, has called on global leaders, investors and heads of governments not to politicize energy. OPEC Secretary General, while speaking exclusively to Channel Television on the sidelines of the ongoing energy conference in Houston, Texas, says the demand for oil and the challenge of the shortfall in supplies could be further exacerbated if political solutions are not quickly put in place. Mr. Bakindo, while acknowledging the veracity of the climate change debate amidst the pushback for fossil fuel production, says investors can take advantage of technology to decarbonize fossil production in a world that still has great appetite for oil and gas. Take a listen.
We are already facing real obstacles to access investment capital in this industry, especially in our own part of the world. We should not further complicate the situation. It is not in the interest of anyone to politicize energy. It is not in the interest of anyone to worsen the energy poverty profile of the world. Nearly 800 million people have no access to electricity, most in our own part of the world. Nearly 2.8 billion people have no access to clean cooking fuels, more than 80% in our own part of the world. Because of massive underinvestments in the industry over the years, we are still battling how to overcome this challenge of our time. Yes, we are impacted by climate change, probably more than any other region in the world. And we see climate and sustainable development, in particular energy poverty, as two sides of the same coin. You cannot address one to the exclusion of the other. And we have been in the forefront of this advocacy.
And Nigeria has given a concession to companies with outstanding foreign currency tax liabilities to pay in naira because they can't get hold of dollars. The Federal Inland Revenue Service has given a 1-month window to the debtors to settle in a local currency. The agency said in an email statement that the concession ends at the end of March, but see Nigerian producers struggle to secure enough dollars to import raw materials and settle taxes when oil prices plunged due to the coronavirus pandemic in 2020. The Central Bank of Nigeria has rationed the supply of the U.S. currency and devalued the naira 3 times in the past 2 years. And the Zimbabwean government has reassured foreign investors it is ready to facilitate easy repatriation of proceeds from the investments in Zimbabwe if they invest in the country. Zimbabwe is on an aggressive drive to lure foreign direct investment to boost its economy while also enhancing improved business operations by local entrepreneurs. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye-bye.